focus on the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
See this? Does it work? Does it work? Big up, Chad. Big up. Oh, the stream was hype. Earnings. I just want to make sure you see this before we start. Does it work? Let me know. Okay, hold on. All right, baby, let's go. All right, Chad, I hope you're having a wonderful day. I know you are. You guys came with the hype today, so God bless you. But simply, man, it's over, okay? Earnings is over, and the reaction to earnings is over, okay? Now, let me explain. It's very simple. I have some evidence to show you too. You're going to like it. But one, now that we got Apple and Amazon out of the way, we're going to cover it. I'm going to talk about what happened. We're going to go beginning, middle, and end. We're going to get the recap and all of that. But now with those earnings out of the way, it is all about the Fed next week. I'm going to be saying this from today till you get the watch list. But this is going on Monday. It's going to be key. But that is one element. And now even the reaction, it's not as if earnings is done. We still have 50% of the Dow left, and I think like 70% of the S&P. But now the fact that we got a big portion, or at least these mega caps, we got a lot of information now, and they have a very big effect. So we're still going to see some stuff, but even then with the Fed next week, chances are you're going to see a bigger reaction from Powell and the Fed. Now, let me give you some evidence. Here is a nice pretty picture that I made on Roblox. Shout out to Roblox, man. But what we got here is the correlation of the NASDAQ to everything. Pretty much the correlation of stocks. Are stocks moving together? That means if one stock moves, do other stocks move even regardless of the news? Pretty much it's a 0.6 correlation on the 3-month realized volatility between the NASDAQ. That means that pretty much more than half of the stocks are just moving together just to move together. If you want a more practical breakdown of what this means, this simply means a majority of the market is dependent on what the big companies do, because if they start to move, well, you're going to be at the mercy of it. Literally, for a stock picker right now, it's not really the best environment, because even if you pick a good stock or even the worst stock, it's more likely just going to correlate to the bigger names that are driving the NASDAQ. So that's one part of it. The other part is simply, you haven't seen this in like 5 years. The last time the correlation was this high, it was June 2020, and you can see during the pandemic crash, it actually went as high as 80.8 correlation. That means everything just moved down because that's it. That was full-on liquidation. So this is kind of what we're getting. There was a lot of other fun facts. Again, the volatility that you are experiencing, I hope you know it is unprecedented. Hasn't seen unprecedented expeditiously. That makes no sense. You get what I'm saying. But all very important things, but now let's talk about what happened here for the day. Very, very simple. We started out another earnings day. We gapped up. Remember, Facebook, they made it out the gulag. They should have been clapped yesterday. They made it out alive. People were feeling good, but you had a bad GDP report. Pretty much the worst GDP since last time we were in 2020. A surprise contraction. But some people like this surprise. I'm telling you, the interpretations were wicked. They're looking at a lot of other data, literally like Visa and MasterCard, from the credit companies to some of the recent data. We got the PCE quarter over quarter, and now this is something for tomorrow. The PCE deflator, that's the Fed's favorite indicator. That is coming out tomorrow, so that could be something. But the GDP kind of brought us down like middle of the day, and then the fact we didn't go down, and now big tech the whole day. Apple and Amazon were up 2 to 4.5%. Then Tesla dropped 6% and then came back. And then who was the other one? Of course, how did I forget Facebook? Facebook was up like 17%. So just even naturally, by nature, those 3 or 4 companies, again, look at the correlation, and they're waiting on the index. Like, they could have lifted the market up. People felt a little bit good. They got excited with earnings. Then earnings, Apple and Amazon disappointed. Now, this is weird because if you were watching on stream, Apple looked good at first. It looks like they killed it and beat it. And then Tim Cook said that they're going to get a big effect from supply chains by middle of the year. I think they said $6 to $8 billion in losses is what they expect in June. So that wasn't good. It dropped a little bit. It's still positive. So that's good. But I mean, it was a good earnings. Overall, they still had growth. It was honestly very impressive. And then Amazon, they missed on like 3 out of 5 things. And then the big kicker, they guided lower than expectations. It was disappointing. It says it's only down like 5 or 6%, but they were up 5% at close. So it's overall like a 10, 11% move. So we're going to see Amazon's going to overshadow things. We're seeing how it's going to weigh into Apple. I mean, WDC, they did good with the chips, and there was a couple of others. Robinhood got clapped. Legit, oh man, he got clapped on it. Oh man. But all of that was there. You know, again, more of the smaller companies, but the bigger ones matter. And now the continuations, everything from last week. Tomorrow is going to be a very interesting day. We'll see if anything happens with energy. You do have the energy companies reporting. You can't play them now. It's all going to be the post earnings. So we're going to find out. But then it's all really now looking ahead for Powell. There's going to be a couple of other companies, but that's what summed it up. Everybody, I'm telling you how the analysts view these Amazon, Apple. It's going to be kind of, we got to see what happens tomorrow. Again, a lot of people, a lot of mixed bags, a lot of interpretations. We just now want to see, with most of these big earnings out the way, a lot of industries touched. Powell next week. Let's see how tomorrow trades. It is going to be very important, but this is the breakdown. And now, what did we do today? What were the plays? I don't think I played anything too crazy, actually. Yeah, I made 2 small plays. I spent $100 for both of them in the morning. I went for a Facebook continuation. They popped in the morning. It started to come down. I said, well, maybe things would do good. Market ended up doing good, but the premiums were a little jacked. Even those 217s, I thought they were going to hit. They were up for like 30, 40% at one point for like 10 minutes, and then they came right back down. And then I grabbed another one for 55 cents here, and this one is just simply right after earnings. Next week, premiums come down. It was cheaper than the day before. So I was like, all right, let's grab it at 50 cents. Did not work out, but not too bad of a trade. And then I grabbed an Apple put just as a lotto there with $50. I said it there. It's just kind of like Facebook said it could be a pivotal earnings. I mean, they have been the safe haven. Literally, this is the yearly, like multi-year chart on Apple. You know, look at this chart. I mean, they've absolutely just been killing it. So, you know, so I said, if anything has meat on the bone, the puts were cheap. They were down 50, 60% because of the rally. I said $50. Let's throw it out there a decent amount of time, but lost on both of those. And then lending tips, he went for Robinhood and Amazon. If you were watching on stream, he came to drop something off, and now that's the thing too. I'll tell you now, I guess if you made it this far, so if you go to the Colt merch website, we just got 150 of these. Again, you should scan and take you to the stream, and I even got some stickers, but if you just want them, that's it. Lending tips wanted to make a bunch of stuff. We had stuff from the thing, and then we just had this idea. It's like free shipping type thing, but you're not getting scammed. It's like $3 for shipping. You're gonna get a shirt and a bunch of stickers, and then that's it. I think we only have like 200 though, so but it's free $99. God bless you, and yeah, if you made it this far. But he made those crazy plays. He came to drop this off. He went for an Amazon $1,000 card. That got clapped. Remember the one I made 2 days ago, $700. That one's going to absolutely get destroyed tomorrow alongside of that. Then he went for Robinhood on April 29th. So he wanted to do it. We talked him down from 10,000. And hopefully, if you guys didn't go see that live interaction, you should. But it's something cool here, you know. You don't want to be too hesitant when the market is at some of these opportunity levels, but obviously there's a lot of risk, and you know, you got big ambitions. Just make sure you go through a couple of questions, control the budget, ask yourself what you could do again with earnings and all that. I'm not recommending this. None of this is a recommendation. You have to understand earnings is a gamble. I say that, people say, oh, you're gambling. Oh, you're gambling now. Oh, no. It's very simple. It's like earnings, you don't know what's going to happen. It's very, very simple. Don't fool yourself. You could be the smartest individual in the world, have as much information as you think, but it is always going to be a gamble with how these end up. So you got to ask yourself a couple of questions here. Know your budget, what you're willing to lose. Ask yourself about the different options. You know, am I going to go for short term, 1 day, 5 days? Can I play a play with a double whammy where maybe it covers earnings and it also covers any future downside as well too? Or can I use a debit spread? You know, where do I break even for an option? Again, simply right now, this could take you a long way. Just want to give you a reminder. What is the break even of your damn play? Look at it during earnings. Even if I don't know how to price it in, whatever it may be, just go look at the play and what is the break even? What is the expiration date? Very simple. Are you saying that the stock is going to get up to this price? Your break even says where you make no money, where you break even by that date. So ask yourself that, but go through a couple questions. It could take you a long way and it should be good. But as far as tomorrow, we're just holding everything else. Still got those UNGs. They came down. A lot of people asked me about those today. We made those free. I think there's going to be more developments. Again, I'm hoping with the the rest of earnings and Powell's, and maybe with Apple, we're able to go up into Powell, because my idea is I think UNG might start moving around there in the next couple days. We'll see. This is why I made it free. We just wanted to play the first reaction. I'm waiting for the next event, but why I'm saying the market going up and all that is because I want to go for the EWGs. Natural gas is like secondary, third tier of it, but if the same reason why UNG would move up is the same reason why pretty much EWG would go down, give or take a little bit of spread, right, between times, dates, and again, that's one thing. If you saw EWG go up, guess what? It might go up again tomorrow because AWS and Amazon, Microsoft did good with cloud, and then what is the biggest holding of EWG? Remember, it's an ETF. It is SAP. So keep all of this in mind because this is going to give us these opportunities to play it. But that's what I'm really going to be looking for. That's what I'm going to be writing out coming into the weekend. We're going to see the post earnings and then really just get an idea of where things are at. But next week is going to be Powell. There's always going to be plays, and we might have one to talk about. But really, tomorrow is important. What we do and where we go from there, that is going to be the key. But ladies and gentlemen, that is it, man. That is all we got. I love you. Have a wonderful day. And make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need you, armor on. I'm just getting too hyped, man. You already know what I'm going to say. You know why? Because I said it today, bro. This is the best timeline. Right here, right now. This is perfect. This is exactly how it should be. This is exactly the best for you and exactly the best for me. It's a wild concept. The God at the bottom is the same God at the top. I hope you... But I love you, Chad. I'll see you in the morning. We're still going to get a little bit of the earnings, but now get ready to shift the focus and some of the macros come into life. So I love you. I'll see you in the morning, baby. God bless you. Peace out.